on News 9 Live. I am Krishna Kumar and I'm being joined in the studios by my colleague Suyash. And as always, we begin Business Plus with a roundup of all the stock market action. Indian stock markets opening in the red for the day. However, they have finally ended up in the green. Somehow a great recovery, especially in the second half of trade. Suyash, talk to us. How has the trading day been?
So, Krishna, it was a muted day of muted opening for the Indian markets amid mixed global cues. Now, if you remember, yesterday on August 8th, US Moody's downgraded 10 regional US banks and also put 6 on notice, which negatively affected the sentiment for equities, both domestically for the US and internationally. Also, one of the reasons why investors were refraining from placing aggressive bets was because RBI is due to come out with its monetary policy decision tomorrow, and also the retail inflation print is also due tomorrow, which is August 10. Now, the markets did pair all the losses and then some near the end of the session and closed in the green, with Nifty not only reclaiming 19,600 levels but also closing above it. Now at close, Nifty was up 0.32% at 19,632 levels. 19,600 levels have been very crucial for the market, so it's a big positive that Nifty was able to not only claim back 19,600 but also close above it. Sensex also surged about 0.23% and closed just marginally shy of 66,000 levels. Mid cap and small cap also reversed the trend of earlier losses and ended in the positive today.
Right, good green signals from the market as it wrapped up our trading for the day. We also have Mr. Mohit Gang, co-founder and CEO of Moneyfront, joining us live on this broadcast. Mohit, thank you so much for taking time out to be with us here on Business Plus on News 9 Live. Talk to us. Great recovery from the markets after that muted start.
Oh yes, absolutely. I think the undercurrent of the market is fairly strong, Krishna Kumar. To be very honest, this month of August has seen some super heavy FII selling. For every single day of August this month, we have seen FII selling in the market. However, the DII flow is fairly strong and the market has not corrected big time. Look, honestly, I think even the futures and the options positions of FII was net negative. They were going short on the market. However, the market was not cracking, and 2% correction was hardly anything. So the FII selling this month, if I'm not wrong, is to the tune of almost 10,000 odd crores in the market. But it is absolutely astounding to see market holding it, and market not even holding that range, but even now trying to again recover back the losses which it has seen for last 6-7 days. So the result season has been fairly okay, but the underlying current in the market, the DII buying, is fairly strong.
All right, Mohit, stay with us. Let me quickly go to Suyash. Suyash, in fact, talk to us about some of the buzzing stocks for the day, so that we can understand, what are the stocks that stood out as far as today's trading session was concerned.
So Coal India came out with its results yesterday, and Coal India was able to beat estimates on both profitability and revenue fronts. And although the profit declined 10%, it was much ahead of the street's expectations. And brokerage firms are now very positive on the medium to long term outlook of Coal India. And as a result, while most of them have maintained their buy rating, a lot of them have also upgraded the target price. Now, Nuvama Wealth Management has a buy call on the stock of about 361 rupees, which implies an upside of about 57% from the current levels. Motilal also has a buy call with a target price of 300%, which implies a upside of about 30%. JM Financials upgraded the stock to buy from hold and has a target price of about 255, which implies an upside about 11%. Now, Krishna, Coal India has been one of the underperformers, at least in 2023. The shares are up about 8%, whereas Sensex and Nifty has surged about 12%. So I think we are seeing some recovery and bottom fishing in Coal India stock.
All right, some fishing in the Coal India story. Mohit, talk to us about these buzzing stocks in trade today. Coal India, we'll take it one by one. We'll begin with Coal India, then we'll talk about Adani Wilmar and the others.
I think, look, the Coal India story is fascinating, to be very honest. I think the street wasn't expecting this set of numbers. Honestly, revenue has grown marginally, but just by 2% odd, but the profits are down as compared to last year, same quarter. But I think the realization bit has surprised the street positively. As I told you, street wasn't expecting this great set of numbers. And I think the story was that the e-auction premiums were very good this year. The labor cost, the raw material cost was going up. So the result was expected to be poor, but the numbers have surprised, and I think the stock should go for a re-rating from here on. So it looks fairly positive from here.
All right, that's as far as Coal India is concerned. What's your take on Adani Wilmar and Gland Pharma?
Look, I think Gland Pharma has been a surprise off the pack for last 2 days. I think the stock is just buzzing like anything. In fact, the entire pharma pack. So I think it's the overall tailwinds in terms of the pharma doing absolutely well. But Gland Pharma for quite a long period of time was an underperformer, was a significant underperformer. The results were quite poor for quarters put together. But I think the management commentary has done the trick. In fact, they've done an acquisition in US, and the US injectable market is looking fairly good for them. And it seems that they've finally got their act together. The key lies in execution for Gland Pharma. I'll again repeat the story and the management commentary is fairly upbeat. What they are planning to do in US is also extremely positive. The results have shown some amount of improvement, but the key will be execution, and it will only come out in next quarter or so whether they are able to execute what they're planning to do. But if they do, then it's a great story in making.
Krishna, Gland Pharma has run up almost 25% in a matter of just 2 sessions. Now, brokerages, now the results were positive, but brokerages are also expecting an early revival in its base business. As a result, Bernstein has retained its outperform rating on the stock and has a target price of about 1742 rupees. And JM Financials also is bullish on the stock with a target price of 1640.
All right. So Gland Pharma, for all those listening, there's a stock out there that's buzzing and buzzing, especially in the recent past, last 2 sessions, 25% gains. Quickly, Mohit, I want to bring this back to you and go back to the broader markets and ask you a simple question that anybody, the layman out there listening to us, is going to be wanting to ask. In July, in June, July, markets were considered overheated. And at that stage, many thought that there was a correction that's going to come. And for all those who are looking to buy on dips in the Indian market, because the long-term story is always great, Mohit, my simple question to you is, are you expecting that correction to come in or not? As simple. And if so, when?
To be honest, Krishna Kumar, I think my philosophy always has been the best day to buy the market was yesterday, and today is the second best day. Honestly, for investors who are long term, I'm not talking of the trading fraternity out there. Their outlook would be different.
Now, somebody looking to get in fresh with their, I'm not talking just direct equity investments. Buying MFs with greater exposure to large cap stocks, for example, the riskiest possible investments, even with MF. All of them will be thinking the same thing. The markets are, having these great vibes, going for the last couple of months. And even then it was predicted, many market analysts like you, I'm not saying you particularly, but from your fraternity, did say that there is a possibility that there's going to be a correction. So watch out for that correction so that you can quickly cash in on that opportunity.
Look, so Indian markets are relatively expensive, and I've consistently maintained that you pay a premium for these kind of emerging stories like the Indian market, where the growth rate is absolutely high and it's amongst the top-notch growth rate markets across the world today. The only risk factors which I see is tomorrow is policy meet, and the inflation number, especially the food inflation, is going a little out of control. Monsoon has also been it's kind of an okayish monsoon with some patches of some bad patches across the country, some good patches across the country. So really skeptical about what stance the RBI will take and the commentary thereof. But honestly, otherwise the result season has been very good. The corporate India balance sheets are looking extremely good. They are highly deleveraged as we stand and speak today. Right. So overall earnings growth looks fairly okay. 10% earnings growth this year should be doable. fairly easily. So I think in all those kind of scenarios, to pay a little bit of premium on the market, I think that's absolutely fair. For someone who wants to enter in the market right now, he has to be a little cautious, not enter in with a huge chunk and put in the entire money at one shot. But yeah, I think staggering it out over next 3 to 6 months, just riding out few couple of quarters from here on will do absolutely good. But you can't be outside the line and just watch the match. You have to be on the ground playing at the crease.
Right. Also, I want to understand, what is, let's get back to that one specific stock that we didn't discuss, which is Adani Wilmar. There's talk of Adani exiting Wilmar, and then there is now, news coming in that, they've denied exiting Wilmar. What exactly, the stock was down for the day. If you can tell us what exactly is going on with Adani and Adani Wilmar.
Look, very difficult to speculate. I think the management has denied the rumors, but Adani apparently wants to get out of the JV with the Wilmar. It's a non-core business for them, and they actually, as to what looks like and what the overall commentary has been from the management, it seems that they're trying to exit some non-core areas of their businesses and shoring up the capital base of the overall group. So they hold almost 44% in this JV, and if they come out, I think that's what the news is. Look, the stock is obviously expensive if you compare to multiples with the peer group and other things, but that's true with all Adani Group stocks, right? So I think the matrices on which you value the stocks are fairly different. But if Adani comes out of the JV, then the street is not absolutely confident if the Wilmar group per se can carry forward the strategy on a single-handed basis, and that's perhaps the reason the stock is down today, right? So yeah, it's anyone's guess, but my guess is that because the group wants to shore up this capital base, it will go in for some more strategic calls. Whether it happens to Wilmar or not will only time will tell.
All right.
Mohit, let's talk about banks. Yesterday on August 8th, Moody's downgraded 10 US regional banks and had put 6 on further notice. Now, time and again, we are seeing a turmoil in the sector, but relatively, Indian banking remains relatively, protected from that, and we are not seeing any massive correction in the Indian banking stocks. Rather, the asset quality is improving, and PSU had been one of the major drivers of the recent run up to about 19,900 levels. So, what's happening over here? Can we expect some correction, and will we see the effect of this turmoil in the US reaching Indian shores?
Very interesting question, Suyash. Honestly, I think US and it's all a fallout of the increased rates out there. To be very honest, when the rates go beyond a particular level, the lower strata of the economy will start feeling the pinch, whether it be corporates or whether it be individuals. The one with the lowest amount of credit rating will obviously feel the heat, and that's what is happening in the US on the corporate and on the individual balance sheets both. Right, the lowest strata is feeling the pinch out there, and the rating cuts doesn't come as a surprise. However, obviously, markets will continue to take all these news with a negative pinch of salt, and which is what happened in the US markets yesterday evening. Now, coming to Indian markets, honestly, Indian balance sheets or Indian bank balance sheets per se has been looking absolutely fantastic for last 1 year odd. As you rightly pointed out, the PSU story has been a greatest turnaround story in the Indian banking history. The NPAs are down at the historic levels. The NIMs are looking extremely healthy for all the banks. Few of the private sector, bigger banks, the private sector space have been posting fantastic numbers. So honestly, I think, and plus to top it up, RBI has been extremely proactive in terms of running the show on the macro front, right? So I think all put together, Indian banking story looks extremely healthy. It's also a function of how the Indian corporates are growing and how the overall space or how the overall economy is shaping up. So my sense is I'm extremely positive. If India's economy continues to do well, then I think banking will always remain at the forefront of it. So it's a great positive.
Mohit, as you mentioned, the asset quality of Indian banks has improved across the board, but what has also happened is that the loan book growth has declined. We saw in the case of SBI, it fell to a 7-quarter low. So the efforts that are going into cleaning the books, is it because of this, are banks not really very how do you say it, very keen on giving out riskier loans?
Look, I think that's a very fine balancing kind of an act. Growth versus quality has always been a cause of concern. You focus more on growth, you lose your control over quality, and that's been the saga of Indian banking industry for years put together. Now, I think they are focusing on quality more, and perhaps from that perspective, a little bit of growth is getting a beating. But my sense is the equilibrium sooner or later comes into play. You go on any of the extremes, the other extreme suffers so much that street gives you a noise, a street gives you a signal that you boss, you're overdoing it, right? So I think that signal has been given to SBI that the quality focus has been maybe a little overdone, and perhaps it's time to refocus on growth. What is also happening is maybe the banks, even though they are reluctant, a lot of credit growth is happening through NBFCs. The kind of NBFC growth which we have seen is again staggering for last 1 or 2 years, post COVID especially. Few of the NBFCs have really gone down the value chain and done a lot of lending. Especially co-lending also has been a big factor. So my sense is banks are also collaborating with these kind of NBFCs and trying to co-lend on their books and so on and so forth. But yes, I think quality focus and growth focus, this is a fine balancing act, as I say. My sense is the focus on growth will again come back.
So Mohit, what will we see first? 20,000 or Nifty going back to 19,000?
No. So look, as I told you, I'm a slightly bullish proponent of the market, and honestly, not now, but right from 19,200 odd levels, I've been fairly optimistic that we'll hit 20,000 first before we hit the previous lows, right? But corrections are a part and parcel of daily cycles. But my sense is the undercurrent is extremely strong, and there's no event risk unless tomorrow RBI comes and surprises us with a rate action on the upside, which could be a slight bit of a dampener for the market. But otherwise, I think the overall parameters are looking extremely healthy, and my sense is we should tick the upper checkbox first, then the lower checkbox.
And quickly, while we're still talking about banks, are you still one of those who think that there's still a lot of value left in public sector banking stocks?
Oh yes, look, I think honestly,
SBI.
after a long time, the books have got cleaned up, and the growth story is just about taking off for them. My sense is there's a lot of value remaining in the public sector space, though the cream has been taken off the table now, and now it is more on the fundamental strength of each bank and how they perform at a core level and at a basic banking level. But yes, if you ask me, they're still trading extremely cheap as compared to their private sector peers, which will always be, the gap will always be. But my sense is there is a true case out there for reduction of this gap to a large extent.
All right, just like the pay packages of those who head these private banks and public banks, there's always a disparity between them. The stocks also have a huge disparity. There should be more parity in between these stocks because there's so much value. But the one question I keep asking is that when we say Indian blue chips, the word always goes to IT stocks. Tell us, lots of talk of lesser demand from Europe and the developed markets, IT in a wobbly IT space in a bit of a wobbly situation, not because of it getting anything wrong, but the way the world is.
Yeah, I think these are all natural business cycles, to be very honest. IT was in great demand during the COVID times, and post that, I think the demand was a bit overdone maybe, and as you reach to an extreme, you obviously tend to correct to an equilibrium state. So larger IT stocks have seen a bit of correction, or have seen a bit of time correction per se, if I were to call it. Right, but I still think there is a lot of value in the mid and small cap IT space. There are a lot of smaller IT names. If one were to really go down the ladder and cherry pick and try and figure out, there is a lot of value out there. Yes, the overall sector in the space, one needs to be a little cautious and needs to see out maybe a quarter or two.
Okay.
But yeah, I think at the bottom of the ladder there is some value.
Okay. Quickly, before we wrap up our markets segment for the day, Suyash, if you can talk to us about the top gainers and top losers in trade today for Wednesday.
Certainly. So pharma stocks were active in today's session. Dr. Reddy's was among the top gainers, and in fact it was a top gainer in the Nifty pack. It rose about 3.4%. Hindalco, after a couple of days of profit booking after its results disappointed the streets, saw some bottom fishing happening and was up about 2.74%. Mahindra and Mahindra, Tata Motors from the auto pack was also among the gainers, whereas Coal India, which again impressed the streets with its results, and more importantly the brokerages, which has led to them increasing their target price on the stock, has led to about a 2% rise in Coal India stock. Among the top losers were Divi's Lab, which was down about 2.69% in today's trade, Apollo Hospitals, which was down about 1%, Maruti Suzuki, which fell about 0.8%, Asian Paints and Bajaj Finance, which fell about 0.6 to 0.7%.
All right, so the top gainers and top losers in trade today. Mohit, before we let you go, any thoughts you have on those big losers for the day and the big gainers for the day?
Nothing specific. I think Divi's Lab has been a great story for the last 1 odd year. In fact, the entire pharma stock and the entire pharma pack has been. So my sense is more like consolidation at a particular level, right? And the pharma pack still looks extremely strong to me. Asian Paints may be a little bit of an overhang from the results of Berger Paint or something like that. But again, look, those are all the bluest of the blue chips, and perhaps the long-term story still remains intact for them.
Right.
But yeah, I think the pharma pack is something to look forward.
The pharma pack
Talking about paints, Berger Paints is out with its results. Berger Paints profit is up almost 40% on a year-on-year basis at about 354.4 crores, whereas revenue is up about 10% to 3,029 crores. EBITDA, Krishna, jumped almost 38% to 556 crores, whereas margin improved to 18.4% from 17.7% in the year ago period.
Oh, so it's all in the green. Great set of numbers. Mohit, quickly your thoughts on that. A great set of numbers from Berger Paints over there. 40% increase in net profit and above 30% increase in operating profit, or EBITDA as it's called. So tell us, with those numbers, are you expecting Asian Paints to open in the green tomorrow morning?
I'm not sure how this takes it. Honestly, it's one of the biggest competitors for Asian Paints. So perhaps a great set of numbers could mean otherwise also, right? And but yeah, I think standalone Berger Paint results have been fantastic. All their segments, whether industrials or retail or even all their product verticals, have been clicking in well for them. And I think it's a fantastic set of numbers. So those are good business franchises, to be very honest.
Mohit, another company that is due to come out with its results today is IRCTC. Do you have any expectations?
Look, I think the stock has been buzzing off late. But I right now don't have any comments on the results. I've not actually tracked it.
All right. Fair enough. I'm afraid we're also running out of time on this front. Mohit, thank you so much for taking time out to be with us, and of course Suyash as well for bringing us all the market action for the day. Thank you, Suyash. It's time now to shift focus away from the stock markets and bring it back to a very important story that we're tracking here at News 9 so well that we have a documentary about it on India's first and the world's first news OTT platform, News 9 Plus, and I have with me joining us on this broadcast is the person who has put that documentary together. It's about the business of cricket rights. We have Shomalya Shantikari joining us. Shomalya, thank you so much for joining us. First of all, talk to us. What's the essential one-liner? If I were to ask you, what's the one line? What is this documentary all about?
This documentary is all about the passion that this game has and the custodians of that game, which is a religion in the country. They are minting money, but will they be minting this time around also? That is the big question that we have to answer or seek answers to in the time coming ahead.
Right, and of course, all of this means, when it comes to broadcast rights, online and TV, all we can hear is ka-ching, 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 and dollars and millions of dollars. We have a guest joining us as well. We have Mr. Soumitra Bose, senior sports journalist, also joining us. Mr. Soumitra Bose, thank you so much for taking time to be with us here on Business Plus on News 9 Live. The moment we talk cricket, the talk of the business of cricket comes along with it, and now the rights for broadcasting cricket matches. Number of cricket matches have improved exponentially, and now there's a question of the platform. With the last year's IPL being viewed on online platform more than anything else, more than even TV, you have a new paradigm as far as cricket rights are concerned, isn't it, Mr. Soumitra Bose?
Not really, because if you still go by the books, television still reigns supreme.
Okay.
With 80% viewers still on television, not on OTT or digital platforms. That is one of the reasons why Star bid so much money to buy the IPL rights. It will still take some time. If my research goes right, it will still take about 3 years for the digital platforms to catch up with television viewership. So that's why Star bids so much money for cricket rights and other sports rights.
Right.
But I will still not say digital is supreme. Yes, digital may be supreme in few years' time, but yes, television is still there.
But the kind of growth we witnessed, Shomalia, with respect to viewership of matches online, that's an incredible story, isn't it? And that's the reason why you had, first of all, BCCI splitting the rights up into digital rights and TV rights. Once upon a time, digital rights was just an add-on along with TV rights. Now they split up and they gave it to two different people.
Yeah, that came on the back of a company which is aggressively trying to get the rights this time. So Jio. So on the back of, so Hotstar benefited from that by snapping up the rights, and it benefited in rise in subscribers and the growth of the game. And this time BCCI also, last time only it realized that it makes sense for them to bifurcate the rights. So they have divided into two packages. One is for the television and one for the digital and for the rest of the world and subcontinent. So right now, if you can see, and the Geo-backed Viacom 18 sports broadcasting combo that it is going ahead. I mean, it is expected to go all out for the digital, and digital is where the game lies in the future. Obviously, TV is still the medium of choice for watching sports broadcasts, but for those people and for with cheap data prices set to stay and the growth in subscribers, I think that is where the real game lies going ahead.
Right, the real game lies. Soumitra, I want to rephrase what I asked you before. I'm talking about the future over here. What the future clearly points to a paradigm that's going to eventually change faster than we think. Because you see the changes. Not long before that there were no two different rights given to two different players, digital and broadcast. Now you clearly BCCI branding it as two separate properties with different abilities for advertisers to leverage.
India have always shown the way to the world. I mean, when it comes to sports rights, I mean, it was Dalmia and Binder who showed that television rights could be auctioned, it could be bought. They won cases in the Supreme Court, and that's when the money started coming into sport. If you go to NFL, if you see NBA, it's all on the same module, and it is the IPL which has been the trendsetter in a way that you can actually bifurcate the rights in digital and television. But as we go forward, television has to evolve, find new ways to compete. And now it's a time of combined TV, and which is OTT is one of them. And as you rightly said, digital is going to be the way forward. And Star, in many ways, they were holding on to both television and digital. But in IPL, we saw a different set of people coming in and bagging the digital rights. So obviously, that's the way forward. But don't forget that Star remains a big player. But it actually boils down to the monetization models, and in that case, I think the new player like Viacom and Jio are in a better place.
Right, I'm only asking this because not very long ago, watching a match on a good HD television on an HD channel, we were willing to pay a premium for it, because all about the theatrical experience of watching it on a nice big TV. People are going out to. People are even going out to buy big TVs, Soumitra, weren't they? Just so that they can catch that match in an HD connection on an HD screen.
Absolutely. When you watch an India-Pakistan match with friends over a cup of tea and some chips, you have to go to a television. You can't be watching it on your mobile set.
I think one important factor.
One second, I'm just going to counter that. I agree with that completely, Soumitra. But what I would agree with, that's how I like watching cricket. But one thing I saw my own behavior change was during the last IPL, when I had so much work, couldn't take time off from work to sit with friends and watch it in a big screen. I loved my phone screen where I could watch match after match while being at work, and I'm sure Shomalia, you also did the same thing.
Yes, I totally agree with that. But I think one important factor that we need to note is a lot of cord cutting has taken place in the last few years. People right now prefer to have their viewing consumption in a different manner. They don't depend on satellite channels for their consumption of entertainment, because all the satellite channels have their OTT also available. The same content is available in that segment, and in fact sometimes earlier. So right now a lot of people people have they've cut connections and they are solely relying on their net connections for watching matches. Sometimes it may not lead to a good TV experience, because as you said, nothing can replace HD. Watching cricket or sports on HD is a totally different experience. But I think technology has evolved a lot from in the past few years, and the mobile companies also realize this. So this is where I think an important factor has played out in the previous years.
And as Shimalya speaks, it seems like India's home game lineups for the next year, October, November 2024, you have India versus New Zealand, Jan, Feb is India versus England. Tons of amazing cricket coming up, Soumitra. One way or the other, big screen, small screen, cable, internet, people are going to watch them. My only question here is, when it comes to the race for those rights, are you seeing this time, maybe this particular tender, which lasts for the next 5 years and ends on the August 25th, that's when tenders close, do you see digital going for a greater sum of money than TV? Because we are talking about the next 5 years and not the last 5 years.
No, I think there will be a balance, because IPL has taken away a lot of money away from the they have kind of cornered the lion's share of the broadcasters' price that they can particularly offer, and IPL has obviously been a more prime property, more handsome property, more flamboyant property than let's assume India playing England in a test match, or India playing Australia in a test match, which could probably finish in 3 days, may not have the same kind of enterprise, same kind of attraction like an IPL match would do. So I think I was hearing your stocks discussion, and two things that came to me was, correction. I think there's a correction that could happen. And two, the thing is that, there was something in green and something in red and stocks going up. But BCCI and cricket has largely been recession-free. The market really doesn't impact them. And if I were to choose some of those words from the stock, BCCI will perhaps retain its status quo and won't sink, or rather gain a bit.
All right, Soumitra Bose there bringing us that perspective. Let's quickly then get a glimpse into that documentary that we've been talking about. That's on News 9 Plus, India's first news OTT. Take a look at this.
Holding of cricket rights has the ability to make a sports broadcaster's business bigger.
Always been hotly contested rights.
The broadcasters who are paying big money have been careless in the past and should be careful of being callous in the present.
BCCI media rights. The tender is finally out.
The BCCI media rights are once again up for renewal. But industry watchers say that this time it is going to be a tempered affair.
Till 2005-2006, the BCCI sold its media rights in a manner that can be best described as secretive. It is a bit of a closed-door, mysterious method of allocating the rights, and the true value never got discovered. In 2006, in the tenure of Sharad Pawar as the president, they introduced a proper tendering system. At least 8 or 10 participants participated in the tender at that time. The company I was then associated with, Nimbus Sport, was successful in acquiring those rights in those days for about $600 million. And people went, oh my God, how can this ever be true? The multinationals, Sony, ESPN, Star, were very conservative at that time.
But the fact that there is value in sport, it was Mr. Bindra and Mr. Dalmia who said that I own the rights, so there must I have the right to sell it. It is their vision how to commercially exploit television rights. In 1993, they won the first. I think that was a very, very significant milestone in the history of BCCI, that they were allowed the right to sell their rights. In 1995, Supreme Court gave another big ruling. They said BCCI is allowed to auction rights. That word auction is very significant because today, if BCCI is floating on money, is because of the auctions.
These are always been hotly contested rights. When I was in ESPN in 2003, we had a very highly contested bidding battle where the first time, I think, it made it to the headlines of all the newspapers where we had actually put in a figure of about 1,040 crores at the ESPN. It's always been the case that the competition has been keen and intense, and people have been willing to pay even prices at which may or may not be possible for them to economically break even for that particular cycle, but because of the strategic importance of having properties, even the largest companies find value.
I think the rights are sold by ego, rights are sold by a determination to be first, and rights are sold depending on how much you want to display your pocket size.
One must pay respect to the fact that ESPN Star Sports was the first private broadcaster in the cable and satellite segment that improved the quality of production, improved the quality of overall coverage, presentation, and started paying reasonable money at that time. So, hats off to them, because all the growth in the 90s was driven by these two broadcasters.
The product cricket was a very shiny product. It's a good product, very classy product, very sexy product. So anything that's sexy and appealing, you would always try and go for it. And as a consumer brand, I would write always a good product to showcase my product. So there was never any dearth of flow of sponsors, and cricket and BCCI loved it. So they took the advantage, and of course the broadcasters also rode that advantage to make it a win-win situation.
Ad sales companies sometimes use cricket as not a break-even, but a breakthrough into the boardrooms of companies who they want to sell other things to.
The rights values has seen a stratospheric rise in the past decade, but nobody has been able to pinpoint whether it makes any business sense.
2006 to 2012 was the era of both Sony and Neo Sports. Neo because of what it did with domestic home cricket, Asia Cup, Bangladesh, Sri Lanka. We did a lot of cricket boards. Sony because it had the ICC rights till 2007 and then the IPL rights thereafter. I think Stars returned to the pitch took place when Uday Shankar decided that they'd been losing too many rights. They lost the ICC rights, they lost the IPL rights, they lost the BCCI home rights. They had nothing. And I think that desperate scramble to get something back made them overpay for the BCCI rights.
My sense is that the broadcasters who are paying big money have been careless in the past and should be careful of being callous in the present. The danger is that there are different revenue models now emerging. The other day, someone was telling me that to watch a full 1 day's cricket is about 2 to 2.5 GB. So the game has shifted from purely marketing it for your 10-second or 5-second spots to seeing, are you a revenue gainer from other sources other than just selling the space on to those who watch cricket.
Viacom 18 bagged the IPL rights for the digital medium last year. Revenue from operations went up from about Rs 1,500 crore to Rs 3,000 crore, but its operating costs shot up 4 times.
Everybody, when they shell out money, either they have a very good solid business plan or they have another plan. The other plan, when I say other plan, could be a land grabbing plan, is to grab. I think Jio has, business strategies always has been to grab attention of the mass. So you have to differentiate between a Star, which is a pure broadcaster, and a Jio, which has multiple e-commerce and m-commerce business.
The land grab is now no longer to sell hoarding sites on. So getting the land is possibly for a variety of reasons. I think that the revenue models have changed, and that is what has shown itself in the IPL, and it could show itself again, I hope, in the BCCI.
BCCI was very clever in trying to, segregate the rights into television and digital, and that is why they have made so much money.
Today, a lot of advertising is shifting into potential digital spaces which are much cheaper than the existing rights holders are willing to sell them for, and that is what we need to look. So therefore, is tomorrow going to be a space where only those who have a telecom license should be eligible to bid for these things?
This time around, you have a tricky situation. In fact, the Zee-Sony merger is in play. You must remember that Zee-Sony, even before merger or post-merger, will be a publicly listed company. Star is having its own set of problems in terms of losing subscribers. You have Viacom 18, which is obviously got a lot of deep pockets to fund this acquisition. But then again, they've just paid a huge boatload of money for the IPL rights. How much of a delta are they going to get from having the BCCI is also a question mark.
Who's the favorite? The answer is very simple. The number of players is going to be lesser in the market this time. So you're going to have a bidding war, but it's going to be short, sharp and sweet. And one of the players who is currently in the business is more likely than any other to get the business.
The other question that everybody is asking is whether there will be a discount on the prices because of a different environment.
Sure, they will get a decent number, but it's difficult to see a very aggressive increase on the last time around because the prices last time were already aggressive.
There will be a correction. Correction in the sense that, there already has been a correction for the fact that, when BCCI was selling its rights from Paytm to Byju's to somebody else.
The last time around they got something around 60 crores per match, which was very aggressive. I'm sure in terms of pure realization, if they were to get something in the region of the same or 5 to 10% higher than that itself per match, I think that would be a very good outcome.
So there has to be correction, but I think even there is correction, BCCI has made so much money from IPL rights that it can afford to lose a little bit on BCCI and yet remain among the top sports organization of the world.
One broad assumption that I will make is that the escalation on a per match basis from what Star paid last time might not be steep. I'll stick my neck out and might even decline.
Well, we will wait and watch on that front and bring you all the action as far as BCCI's rights tender is concerned. Bear in mind, 25th of August is when the tenders close, after which we will know who bagged the rights, both for TV broadcast as well as online digital as well. But moving on here on the show on Business Plus to a very important story that we're tracking over here, and that has to do with the Prime Minister Jan Arogya Yojana scheme, or the PMJ scheme. 7.5 lakh beneficiaries of that scheme are linked to exactly one mobile number, and that's the number 9 written 10 times over. We have my colleague Shweta Kothari now joining us for the latest on that front. Shweta, talk to us, in terms of what exactly is going on over here. We've heard of fake GST accounts, fake PAN numbers, so many others. But this is a scheme that's meant to benefit. It's a health scheme. It's a very important scheme, and 7.5 lakh beneficiaries are fake.
Let's first tell our viewers where we got this information from. So Comptroller and Auditor General of India, which is CAG, government's apex regulator, auditor, has tabled this report in the Parliament. Some very damning, points coming out of that report. And as you pointed out, Krishna, to begin with, 7.5 lakh PMJY, which is the Pradhan Mantri Jan Arogya Yojana scheme, launched by Prime Minister in 2018. 7.5 lakh beneficiaries were linked to one mobile number, which essentially means that the entire beneficiary system was in a way subverted. Some of these names were unrealistic, some of their date of birth were duplicates, the IDs were duplicates, the family size was unrealistic, and one number that they were linked to, and this is interesting to point out, is 10 times 9,
yes,
which is 10 times 99999. And that is the number of people who were linked to PMJY, 7.5 lakh beneficiaries to that very number. Now, what does this tell you? This tells you that some of these beneficiaries never existed on paper, therefore swindled the government of the money that beneficiaries seem to have withdrawn in period between 2018 to 21. Further, now treatment of beneficiaries was shown and that was registered was unrealistic. Let's go back to that previous slide, please. We didn't really cover all those points, but basically, essentially, the treatment that was shown was on paper, was not unrealistic. Some of these people had already died when that money was availed. Let's quickly go back to that previous slide, please. So people who had died, money was availed, beneficiaries continued to take money in the name of the people who were not alive at the time the treatment was sought. Admission of same patients in multiple hospitals during the same period. Essentially, one beneficiary who was admitted in various hospitals at the same time and withdrawing money from that government scheme. Let's move further. Government data also says that 88,000 patients died during the treatment, but 2 lakh same patient claims were later made. So out of the 88,000 patients that had died, about 2 lakh same patient claims were later made through PMJY. Further, Chhattisgarh, Haryana, Jharkhand, Kerala, MP had most number of cases reported where essentially there was found to be fraud in the number of beneficiaries who were availing money from the government, and also number of beneficiaries who were linked to a similar account, which means this is the amount of money that we're looking at that was swindled from, Krishna, essentially government coffers.
Right, and all of this is coming from its official sources. This is not an estimation. This is from the Comptroller and Auditor General of India, who has found lapses in the Ayushman Bharat scheme, which comes under the umbrella of Ayushman Bharat.
Let's also quickly tell you why PMJY was launched to begin with. It was launched to provide health insurance of up to 5 lakh per family per year. Now, the CAG audit of data is from September, as I said, of 2018 to 2021, which is from the time it was launched up until 2021. So we're talking about data that is emerging by the way of that important CAG report.
Right, and this is audit of data from the September 2018 to March 2021, and that's where these lapses have been found. The concerning part over here is that the people who need it, who deserve these government schemes for healthcare, which is a crucial part of their existence, they don't get it. 7.5 lakh is a huge number, and the fact that this is done consistently even for patients who are not even alive. One is that them getting beneficiaries with a fake number, and then people doubling up. It's like almost double indemnity when a patient has died and somebody else is claiming benefits of them.
Absolutely. Patients who have died, Krishna, patients who are not alive, and essentially some of these patients, let me also quickly point out, were actually admitted in variety of hospitals. So one patient who's admitted in more than one hospital claiming money from all of these hospitals at the same time. So these are the number of people who are actually, as I said, swindling government. This is government money and this is government data. So nothing to contest here as to what data that has come off so far. All of this essentially in public domain at this point in time. The question that needs to be asked is, how was this allowed?
Right, there is all of this essentially means that although the scheme was announced ostentatiously as a great way for saving those Indians who need government-sponsored healthcare, this certainly doesn't come as good news at all whatsoever. Bear in mind, Shweta, how expensive healthcare is in this country already, especially private healthcare, and how out of reach it is. And it is schemes like these that really put the government in the good books of the people. You know, they have more trust in the government because you have a government that cares about their healthcare needs. And here you have an official government audited report that tells you that this scheme is a lot in terms of when you read it on paper, but when it comes to implementation, something has gone very awry. And all of this means that, you know, this scheme, this is in the initial phase. It could have expanded and touched more people, but with the kind of numbers that we're already seeing right now, there has to be a serious reset in terms of how the government approaches the Ayushman Bharat scheme per se, and of course major changes in the way the PM Jan Arogya Yojana scheme is implemented, because there is something fundamentally rotten over here.
Absolutely, and you know, let's quickly understand why linking it to a number is important. That is how you identify a beneficiary. And because so many of them were linked to one mobile number, this basically hints at a fact that there's not just discrepancy in data, that this money was actually reserved for someone who deserved it. 5 lakh rupee per family.
Yes.
And the money did not go to the person who deserved it. Others were able to swindle it off.
Yeah.
There were discrepancies in data, and not just discrepancies by the way of number of
So
people who are linked to one mobile number.
The problem begins with the first registration in the first place. How come so many beneficiaries, how come nowhere in the system it got detected that one number, and look at that number, it's 10 times the number 999999999. How can you not see that number in the first place? How come it never came up in any of these checks so far, and it's been going on for a good 3-4 years, and finally it pops up with those numbers, which means already we've lost so many people who could have benefited from this scheme, who haven't benefited, and that is still 2021. What about all those who lost from 2021 up till now?
22 to 23. We don't have data for these years just as yet, which means this is a CAG report of until 2021 from the time it was launched, which was September of 2018. So essentially a very limited data, but it tells you that crores of rupees have been given to wrongful beneficiaries, have been claimed by people who did not want that money, or who did not deserve that money rather, and got it anyhow.
Right, and it basically means that those who needed that government scheme continue to remain empty-handed, and in that sense, you know, this is the kind of stuff that can make the trust of the people in the government, shake the trust of the people in the government, because you know, you have this scheme which is meant for the common man, which is a kind of, you know, image building, goodwill building scheme, essentially, if you ask me, amongst so many other things. And then when you find that these kind of lapses exist in that kind of a scheme, that's when you sort of go back to question, you know, is the implementation of this ostentatious scheme, was it done in the right manner, with the right intent, with the right kind of efforts right from the beginning? And if not, then I think 2023 is about time that we revisit this entire Ayushman Bharat scheme. To start with,
revisit it, and also perhaps, you know, something interesting you pointed out. You said, why was it not surfaced earlier? If you see a number being repeated for not 1 lakh, 2 lakh, 7 lakh recipients, you ought to have found out, which essentially means if it was identified, it was not stopped, which means that many authorities at the state level, at the central level, allowed it to happen, unless of course it was flagged by the CAG here. So you waited for a government auditor to audit your books, and for them to identify that there is corruption. So essentially reeks of corruption, reeks of our money, taxpayers' money going to waste.
Right. Healthcare is a state subject, so there is, I'm sure, state level corruption that you can't deny over there. But the scheme is a central government scheme.
It is a central
government
scheme.
or the blame is eventually lies with the government. So
both central
with
and
the central
state,
government,
with both state and central government, because data is maintained by state governments, and that data rather then further goes to the central government. So it is not a lapse on central government's front; it's a lapse on both state and central government's front. Nobody was able to identify a database which is basically, you know, sending out wrongful money to wrongful recipients. So essentially we're talking about taxpayers' money here. We're talking about your and my hard-earned money, which is going to people who don't really deserve it.
Oh, absolutely. And that is of course for great concern. I'm afraid we've completely run out of time here on this edition of Business Plus. With that, thank you, Shweta, for joining us. We continue our coverage of all that's happening in the Parliament here on News 9 Live. Let's cut back across live and listen into all the latest from Lok Sabha.
అవిశ్వాస తీర్మానం మీద మేము మాట్లాడడం జరుగుతుంది అధ్యక్ష. అదేవిధంగా అధ్యక్ష, ఈ మణిపూర్ కానీ గిరిజన ప్రాంతాలలో మొదటి నుంచి విభజించు పాలించు జాతుల మధ్య, మతాల మధ్య, భాషల మధ్య విభజించు పాలించు విధానాన్ని బ్రిటిష్ వాళ్ళు తీసుకొచ్చిండ్రు. ఆ బ్రిటిష్ వాళ్ళ విధానాన్నే బ్రిటిష్ జనతా పార్టీ అంటే బీజేపీ